Sorry guys to keep you waiting. I got hold up here before going live with this presentation. If you're new to this, it is 9:08 a.m. in London right now, and my name is Alejandro Zambrano, Chief Market Analyst with Amana Capital and TradeCaptain.com. In the next 10 minutes, that will be 600 seconds, we're going to provide you guys with a quick update on the main markets. So that will be Eurodollar, Bitcoin, crude oil, the DAX 30, and the price of gold. We're doing all this free. The only thing we would like you guys to do is obviously to share and retweet when we produce this kind of videos and outlooks. Why? Because if we see that people are actually watching it, we'll do more of it. On the other hand, if we just have a few people, then obviously we'll do less of them. Alright, let's get going. But before we start, as always, do bear in mind that trading financial markets is unfortunately risky. You can make money trading financial markets, but a lot of people don't really tell you that you can actually lose money as well. And if you're trading with leverage, then yes, you can actually lose more than your invested money. So please bear that in mind if you are new to trading, and even if you're experienced, do click on the risk disclosure here that you'll see on our home page to be able to read more about the risks involved when trading markets. Now let's begin. This is the euro versus the USD, and a few days ago we said the market could potentially bounce from 1868. The market is doing its best here to trying to bottom out here, as you can see on this 1 hour chart. But the euro dollar, is taking its little time, which is fully normal. Sometimes it does take long time for the market to really develop in line with the overall trend. But nothing has actually changed, so for now I'm gonna remain bullish. The only thing I am actually gonna do is I'm gonna lower the key level a little bit. Just gonna put it at 118.02, which is a level just below the low created here Thursday last week. If we take out this level, we take out the rising uptrend, and this is a trend. The market created a low here on the 7th of November. It's almost been a month now that this has been in development, this trend, and if we take out 118.02, the market could tumble down to the next support level, which is 117.10. Until that happens, I suspect we can head to Friday's high and then potentially all the way up to the high here created on Monday last week. Here's the price of Bitcoin. Now the price of Bitcoin is bullish. The last good idea I shared with you guys here was to go along here and book profits up here. And the market is bullish, and I think what it's going to try to do now is going to try to continue to just push to the upside as it tends to do. So after like a strong pullback like these ones, the market just tends to create higher and higher highs. To give you an idea, you can see this decline here, and then went all the way up to the highs. I think it's pretty much similar situation here, went all the way to the high. But obviously it's not going to go as quickly just because the market is starting to trade, push from the lows here. The same thing here, push from the lows. So people are not going to be very enthusiastic to go along, but they're definitely going to be adding to positions. And then maybe what could happen is that we trade sideways for a few days and then we'll push to the upside. The markets are like human beings. Sometimes they need a break, they need to relax, and then when they have relaxed enough, they push to the upside. So what's next here? Well, this is the high here created on Sunday, and I think if we take that level out, the market will most likely head a little bit higher. Maybe it'll head up today just to pretty much 12,130. If we look at the monthly pivot point, then it could reach 12,400, and by the end of the month, maybe we'll be trading here at 14,800. No, I'm not 100% convinced that this is the best opportunity to go long, but if it breaks the upside, it's most likely going to go up, and then it's probably going to come down a bit, and this low here is going to be the level that people are focusing on. So I think people going long here, they're probably adding stop losses just below here. The alternative, which is my preferred scenario, is that we have a steeper pullback, maybe down to about 10,248, which is a level between the 50% and 61.8% correction level, and then from these levels bounce to the upside. But the way this is going, I suspect it's gonna push the upside and push a little bit higher like this, and then maybe tomorrow we'll be trading here around 12,084 or something like that, and then continues to head up higher, maybe in this sort of pace. This is the price of crude oil. Now, West Texas is bullish. If you look at it from a bigger picture perspective, we did have a very nice trade last week. We did say market is overbought, and around here people probably gonna go long and then push to the upside. That worked out great. And then the market, and then I said if we go down to 57.72 again, I think traders are gonna look to go long here again and push it to the upside. I'm still sticking to that idea because as long as you trade above 56.71, then there's no reason to change that bias. We're at the 15-day EMA, which has to kind of work out on some sort of support, so there's no real change to the outlook here. But the market is definitely correcting a bit more than I thought it was going to correct. But it's nothing really alarming just yet. So I don't really anticipate it to be too much different to, for example, when we said this market can bottom out and head up higher here. Or for example, when I said a few days ago, in November, I said that the market could bottom out from here and then push to the upside. I anticipate the same sort of process as long as it's above 56.71. On the other hand, take that out, then people that are long here are going to be stopped out. And their selling is probably going to push price a little bit lower. And then you have a little bit of a bounce and then potentially continuous decline all the way down to the next low. Because when you take out one low, I'll target the next low, which is 56.75. Here's the price of gold. Now gold is trading sideways. There's not much happening here. It's probably one of the more boring markets right now. It's very straightforward from a technical point of view. Watch 1263 break to the downside, can take price lower. The alternative is 1299, take out the high and we push to the upside. Yesterday I did publish an article on tradecaptain.com, which is this one. Now here it shows you gold in blue, and here's the price axis for gold. You see prices trading pretty much around 12,075. 1,275, and the gray line here is the real 5-year government bond yield of the US. That is the 5-year government treasury bond, but we get rid of the inflation rate, or the inflation part of it. So this shows that right now the actual real yield is pretty much at, actually shows here 36, right? 36. And you can see I inverted the scale. So when this goes down, the real yield is gaining. So it's becoming more and more expensive to for the US government to borrow money. And at the same time, when the real yield goes up, people go to that currency. To give you an idea, if you have two banks, Bank A gives you 5% to deposit your money with them. The other one gives you 10% to deposit money with them, and there's no change, there's no difference here in the services. It's the same mobile app, it's the same service, it's the same people, it's exactly the same thing. Well, you would go where you get the higher interest rates. It's the same thing here. The dollar tends to gain on higher interest rates, and here you have a quite nice big divergence. Now we have seen these divergences in the past. Look here in 2014 and in 2015. So it doesn't always have to play out, but you can see that for the rest of the time, they tend to move together in tandem. And this is not just a relationship that is from 2014. In fact, this relationship is much older than this. So, with gold trading sideways and the real yield pushing to the downside, well, I would bet that we could potentially take out this low. So if we take out 1263, the market could touch 1251. Followed by 1235, sorry, and then 1214. So that's something to keep an eye on. Now, this is the DAX, and the DAX is short-term bearish. It's capped by 13,200. Take out that rally or that high, you will probably have a nice little Christmas rally. Buy this, not necessarily right now. Well, actually, in general, in December, like November, December, January, February, March, tend to be the good months of stock markets, so people tend to go along at that point. So if we take out 13,200, it wouldn't surprise me if we actually go to the upside. But in the short term, this market is trading sideways, so there's not too much we can do about this just right now. And that, guys, concludes the market update. Now, if you like more analysis like this, we do actually have another webinar coming up in a few hours. Let me see here if I can show you. So, we have a webinar coming up today in 5 hours and 26 minutes. It's going to be a live coverage of the US ISM non-manufacturing composite. That's an economic indicator that tells us how the service sector is doing in the United States of America. So what I'm going to be doing is we're going to load the charts and take a look at some of the key markets like the euro dollar and the dollar yen 10 minutes before the actual news breaks. So I'm going to introduce you guys what this indicator is all about, why people follow it. We're going to look at the charts and see, okay, so what is the market doing? Do we have any interesting trade ideas? Why? Because if the ISM is better than expected, the dollar could gain a bit. On the other hand, if the ISM is worse off than expected, the dollar could lose a bit. So people watch these events to trade on these. So that's why we're doing it. We had a very nice successful episode on Friday last week where we looked at the Aussie dollar CAD and the market decline with about 80 to 90 pip following the event. So check that out. It's free to join. You just click here and you need to sign up. And when you have signed up once, you'll have access to all of our webinars. You just need to create a first name, last name, phone, email, country. Put on this little code here to make sure that you're not a spammer, and then you register. And when you register for this one, you will actually have access to all the webinars in this series, because tomorrow we're doing the ADP report, which is like a prelude to the non-farm payrolls, really. And you'll have access to this one here as well, the crypto trace of 2018. So you just need to register once, and then you'll have access to this information. And we have more events coming up in December. I just need to add them here. And then as well, we do have further events coming up in January. So it's a great opportunity for you guys to join. Now, so you know, here we're not gonna do this webinar on Thursday and Friday, and the reason for that I'm actually traveling to China. I'm gonna partake in the China Forex Expo 2017, and that means that I'm gonna be over there, and I'm not gonna have the opportunity to do the webinars because I'm gonna be speaking here. Okay, guys, have a great day, and I'll see you guys tomorrow at the same time. Don't forget to retweet and share this video. The more you share, the more we care. Thanks.